Hey everybody, this is Eric Gross with the Eric Gross Group and EXP, and my wife and I are licensed realtors in Ohio and Florida working the Cincinnati and Tampa market. We work with retail clients, we work with investors, and this is our May 2023 market update video. I'm super excited to do this. Been super busy the past few months, seen a lot pick up, and that's partly what we're going to be talking about. Just a quick recap, end of 2022, saw the market slow down a ton, decided to do these videos just to keep everybody up to date with what we were seeing, and now we're doing the update videos and it's a completely different tone. So what we saw going into May, compared to last year, what we've seen this whole year is our volume is actually down about 40%. And a lot of people are like, that's not good, that can't be good. But ironically enough, it's just because we have less homes being listed. So many sellers are locked into low interest rates, and there's just this kind of, do people want to sell? Do they not want to sell with external factors? So we're seeing a lot of people stay in their homes, making it a little bit tougher on just regular buyers. But interest rates did curb that demand a little bit, and we're still out of swing. Our supply is still really low. We're actually down about 30% compared to where we were last year, but our demand, even though it has dropped a little bit, is still very strong. And our value in Cincinnati actually went up 10% compared to last year. We saw our market appreciate. We're at about 280,000. Last year at this time, we were sitting around 255. So that's crazy to think as a seller that you're still getting 10% appreciation. The interest rate hikes were supposed to cool that off a bunch. We've seen that a little bit, but because of the lack of inventory, we've still been seeing everything kind of be crunched down. I mean, that low volume is having a huge effect. So I can dive individually into the numbers, but what I can really tell you is that our active inventory is down about 30%. We're sitting at about 1,700 active listings in Cincinnati. Our inventory has stayed roughly about the same, where we're sitting pretty low. I mean, we're one of the best targets we look at to keep an eye on the market is months of supply. And we're at less than a month of supply, which means if another house wasn't listed, that means it would take less than a month for every home to be purchased with the demand and what we're seeing. That's crazy. That's going to keep everything kind of tight. It's going to keep everything to the point where we're seeing tons of showings, multiple offers on homes, high competition. And whether we see that going through the rest of 2023, it's really tough to say. It's something that everybody's asking. Will we continue to see this? As of right now, with inventory being low, this does seem to be the new norm, at least for now. Going into 2020, end of 2023 and 2024, there could be some external factors that change that. The Fed rate just recently did another 25-point basis hike, but it's actually typically baked into rates. So we're seeing those rates stay steady, about 6.5%, which is where we've been for quite a bit. They're actually down a little bit compared to where they were at the end of 2022, where we were flirting with 7%. Investor loans, like if you're doing a buy and hold, those rates are actually a little bit higher right now. You're probably closer to a 7, low 7s, and that's really killing cash flow for the buy and hold investors. Our flippers are doing great. I mean, a lot of the flippers right now, if you have a great product, you list it, you price it correctly, the house is going to sell, and you're seeing those numbers kind of bump up. So if you started to flip in November, you weren't expecting to list for what you are now, but the market's kind of played out that way just because we don't have a ton of inventory. Seeing the same thing in Tampa. Tampa is it's really low inventory for the population size. We're seeing a lot of active buyers. We're seeing a lot of people want to move there. So it's kind of the same dynamics. Inventory has increased a little bit more there. We are seeing maybe prices come down a little bit, but it's a larger market, and we kind of expected that with that price range that it falls in, whereas Cincinnati is a little bit more comfortable. Looking forward, what does this mean? So May and April were really hot. March was a really hot market. We'll probably see that through the rest of May, into June, and probably into July. Barring external factors, this is probably going to be how it's going to be for the next little bit. There's nothing that's changing. There's really low inventory and there's really high demand, and it's making it tough. Now, there's still ways to win offers. There's still ways to get into a house. It takes a lot of patience. On the investor side, run your stuff conservatively. Try and get in and out of projects as quick as you can. Try not to take too long. If you're doing buy and hold, be super conservative on what you're doing. Make sure the numbers make sense. Make sure that the rents make sense, and just keep plugging away. So if anybody has any questions, you can reach out to us at 513-907-4271. That's my personal number. We'd love to answer any questions you might have with the Cincinnati and Tampa market. If you're just a regular retail buyer, we'd love to tell you how we're getting our clients' offers accepted. This year has been, we've had the most sales that we've had ever. And then if you're an investor, we'd love to tell you how we can get you started with either flips or buy and hold, or work with some wholesalers to get on some lists. So hope everybody has an amazing May, and can't wait to see you guys in June. Have a good one.